from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Pinterest gets ready. New CEO Bill Reddy joins us for an exclusive interview to share what he's learned after 30 days on the job and his action plan to evolve the $15 billion social e-commerce platform in the face of tough macro conditions and a changing tech landscape. Plus, a conversation with Marketa's outgoing CEO, Jason Gardner, is looking for his replacement as fintech faces rising credit card debt and consumers under pressure. He says he's no longer the right person to run the company for the next phase of growth. And who is Javier Olivan? The 15-year Facebook veteran is now Meta's new COO. Why he's being called the anti-Sheryl Sandberg. All of that in a moment, but first I want to get a look at the markets. And Ed seemed to rally yesterday, but maybe went a little too far. The Fed on track to stay aggressive about fighting inflation. What are investors thinking? Yeah, I think we're zeroed in on the Fed, but really it was a day that lacked any sort of major catalyst. There's a lot of red on that screen, but actually equity markets have been higher throughout Thursday's session, then kind of turned a corner. The NASDAQ 100 down 0.7%. It did coincide with a big push higher in the yields, US 10-year yield rising 11 basis points, 2.88%. And Apple, we're really zeroed in on Apple right now. Of course, it has such a significant impact on the market given its weighting on the major indices, and that's kind of what the topic of discussion's been, because it's been doing relatively well coming off those June lows. You come with me, look at this terminal chart on my Bloomberg. We're talking about two ideas here. Apple stock is at a record high relative to the S&P 500. The S&P has come off its June low, but Apple's done even better in that time. But its weighting as a percentage or a proportion of the S&P 500 is also near record highs. And I've noticed in recent days that it's having a significant drag on the market in either direction. Bloomberg also reporting a scoop, by the way, on Thursday. According to sources, Apple's instructed its suppliers to prepare to make 90 million handsets this year, which puts it on par with last year. The idea being that we think the luxury end of the handset market might hold up. Earnings season continues well. I'm watching Rivian. You know, it's a company I track really closely. Strong quarter of sales, 364 million, first real quarter of sales, but it's actually expecting now a wider loss for the year. Raw material inflation, supply chain crunch, freight costs. Shares have been down 7%, now up 2%. I've got to run, Em, because the Rivian call starts any moment. But before I do, happy birthday. Aw, thank you, Ed. I appreciate it. I appreciate you not sharing my age, too. Thank you. Okay, fintech platform Marketa announcing strong earnings results, but news of a regime change made shareholders anxious. Marketa is on the hunt for a new executive team. Shares plunged after the credit card issuer announced this shakeup, a search for a new CEO and COO. Joining me now to talk about it is outgoing Marketa CEO Jason Gardner, who is now searching for his successor. So, Jason, tell us more of the story behind this leadership change. Why and why now?
Well, happy birthday, Emily. Thank you for having me, and thank you for your continued interest in Marketa. I started with succession planning. When I took the company public back in June 9th of 21, the board was asking me about succession planning, and it's not something I ever thought about. And then it got more intense in January in regards to succession planning and, you know, what if you got hit by a bus, who would take over the company? And what I did is I talked to a lot of other CEOs, other founder CEOs who stepped into the exec chairman role, what they were looking for, why did they do it? And it was really, really enlightening. And I felt that I'm someone who loves people, products, and our customers, and finding a CEO who is much better suited for our next phase of growth, which is building a sustainably profitable company. That combination I thought was really, really powerful, and I got really excited about it. I spoke with the board. I told them what my plan was, and I wanted to be very transparent about it, transparent to our employees, our customers, and our shareholders. And I'm just really excited about this step. I care deeply about the company. It's what's best for Marketa over the next couple decades, and truly feel like this is the best next step for the business. I am in the role now. I am in the role. It could be 6 months or a year until we find a new CEO, but really excited about the decision and what's next.
Why change out the CEO and the COO roles at the same time?
So company organizations are organisms. We want to be flexible, we want to be nimble, and I've always made decisions about this. Having a hyper-growth company, our needs change from time to time. Vidya and I have been having conversations over the last few weeks. What's next for the business? The CRO is next. It's not a COO. It's bringing in somebody who's solely focused on the revenue side of the business, while I can be focused on being a CEO and focusing on the day-to-day operations of the company and finding the next CEO and then creating the combination between that. I thought that was the best next step for the business. She and I had that conversation. She decided to step away while I'll focus on hiring the CRO and hiring the CEO along with the team, the board, and the company. And again, just excited about this next step. And it feels like a weight lifted off. I don't like secrets. Secrets are uncomfortable, and transparency is a core tenet of who I am. So be able to talk about this publicly is just wonderful.
I'm curious what advice you have to others who might be thinking about the same thing, wondering the same thing. I'm sure it's hard to step away from your baby, essentially, but what message would you send to other executives out there about, trying to figure out when is the right time? And maybe it is the right time.
You got to do what's best for the business. As a public company CEO, you have to do what's best for your shareholders as well. And what is the powerful combination that is going to build a better, stronger business in the future? And I ultimately decided the combination between a founder who wants to be focused on people, products, and customers, and a CEO who wants to be focused on the day-to-day operations of the business, that is what's best for Marketa. And I ultimately felt that's the step that I needed to take. It's certainly surprising to a lot of people that I wanted to do that. But I love my baby, who's now a young adult. And I felt that having someone else to lead this young adult deep into the future was the best next step. So the advice I would have to founders is be selfless. Think about what is best for the company and be very transparent about it so that people can know what your intent is as you lead into the future.
Now, we are in the middle of a difficult macroeconomic environment. We may be headed into a recession. What is your outlook on the fintech landscape and the environment that your successor will be walking into?
Well, we had a great first half, remaining cautious in the second half. And you're right, depending on the experts you talk to, we're in a recession, not in a recession is coming. It's not really clear about where we're headed. We're a very strong company. We're the market leader in our space. We had 53% year-over-year growth. We had a 66% rise in gross profit. We have $1.7 billion in cash, a lot of options, whether it's investing more in the business. We are hiring, whether it's M&A. But there's a lot of uncertainty moving forward. We have a very strong, obviously, blue chip base of customers who continue to perform while we're building out more and more business around the world, investing in our product, investing in our people, and investing in our future.
All right, Jason, appreciate you joining us. Thanks for sharing some of that with us, and we'll be watching to see how this shuffle plays out. Marketa CEO Jason Gardner.
Take care.
Take care. All right, coming up, a conversation with a newly appointed CEO, Bill Reddy of Pinterest. He's with us in an exclusive interview. Next, this is Bloomberg. It's been 1 month since the executive shuffle at Pinterest. Last month, co-founder Ben Silbermann handed the reins to Bill Reddy, the former president of commerce and payments at Google. On his first call as CEO, Reddy said he'll lay out a plan of action in coming months, focusing on the app's ability to, quote, help people go from inspiration to realization. Bill Reddy joins me now. Bill, it's great to have you back on the show after a few years. So your first 30 days, what's been the focus and how are you shaping that plan of action?
Well, it's been a great first month with the team, for sure. We jumped right into it with earnings and some great engagement with our investors. But it's really been inspiring for me to see, as I've come into Pinterest, the things that I really admired from the outside in terms of Pinterest's mission and vision and how much people really care about it being a positive place on the internet, a place that people can go for daily inspiration, whether they're looking for things to make or to do or to buy. It's been really great to see what a dedicated team we have around those things, and the really great momentum the team has built over many years, as well as a lot of exciting things that we're in the midst of now.
Now, you were running commerce at Google. Before that, you were the COO of PayPal. You ran Venmo. You ran Braintree. You were actually on our show several times in that role. How did the conversation start with Pinterest, and how did you both come to the decision that this was the right call?
So, have admired what Ben and the team here built over many years. And more recently, Ben and I started talking about, not only, how he was thinking about what he wanted for himself, but also what he hoped for from Pinterest. And there's just a lot of really great alignment on those things around the vision for the business. I think, as you touched on, in the intro, the opportunity to go from inspiration to realization, I think is just a really unique thing that doesn't exist in many places. Finding inspiration and intent in the same platform is really unique and uncommon. And I think as much as there's a tremendous amount of discovery and inspiration and intent on Pinterest, the opportunity to help people take that all the way through to realization, I think is going to be a great next chapter in where Pinterest can go. And of course, making sure to continue on all the really great inspiration and discovery that's already the core of what people love about the platform.
There was some surprise that Ben left. Obviously, he's a founder. He has been there for years. Can you give us any more insight into why he decided that now was the time to move on?
Well, Ben's done an amazing job over the course of 12 years building a business from zero. And so, tons of admiration and respect for Ben as an entrepreneur. And the great thing is, Ben and I spent a lot of time, and we have a lot of common vision for where the company can go. And so, I'm excited to continue engaging with Ben. He's a very engaged and passionate board member, and someone who I continue to spend a lot of time with. And again, he's done an amazing job of building Pinterest to what it is today. And it's a great partnership in terms of where we take it going forward.
I'm a big pinner, and know that it's a super useful product. And as you say, it sits at this really important intersection of social and e-commerce and search. Some would say there hasn't been a lot of innovation or evolution over the last several years. How do you want to better harness that power that Pinterest has?
Yeah, well, I think two things I'd say. One, I think the team has innovated quite a lot. I think if you look at the platform today versus where it's been in the past, I think there's a lot to be really excited about. You have, in the shift to video, for example, we share this, on our earnings, that we now have 10% plus of our engagement is coming over video, while also still staying really true to what users expect in terms of, bringing together a bunch of really great inspirational images and things that they're interested in. So I think it's a good example of innovating with users, but I think, there's also a lot that's still left to be done. And I think that really is around how do you help people harness that inspiration and intent that they have. One of the great things about Pinterest is that, people aren't just casually browsing. It's not just lean back. People are coming with an intent and a purpose, and they're coming at a part of their journey where they still haven't yet decided, what it is they want to do or to buy. They may know they're looking to put together a great outfit or plan a party or redesign a room, but they're at this moment where they're still trying to figure out, well, what do I want in that room? What do I want that outfit to be? Or what do I want that party to look like? That's a really unique moment in the user's journey, and a place where I think our platform is quite unique, and where we have a lot of opportunity to now take that user from not just, I could put together that great outfit, or I could put together that great room, but I can go all the way to action and finding the things I want to buy to put that together, or find the places to connect with to go help me take the next step in that journey. And so I think those are places where there's a lot of forward innovation left to go. And I think you see that continuing to resonate with users and with advertisers. I think you're seeing that play out in the ads business, where that combination of inspiration and intent is really what's making Pinterest a must-buy for advertisers, even as advertisers are shifting how they think about what they need to be doing. That combination of inspiration and intent really stands out, and I think makes Pinterest a must-buy for advertisers as well.
Well, how do you think your Google and payments experience can play here? I mean, is the biggest opportunity advertising? Is the biggest opportunity e-commerce? Is the dream to be able to see something on Pinterest and buy it, or figure out, where that pillow came from, or how somebody can make it if they want to make it themselves?
Well, yes to each of those. I think how you put those things together really matters. And I think if you look at what I think Pinterest does really well, it is a curated journey where, yes, there's a lot of really great AI and ML that's helping put together, things that when you're trying to figure out what it is that you want to do, whether it's making or doing or buying, that we're going to bring a lot of really great inspiration together on those things. But it's curated, and it's not just AI and ML figuring those things out. How do you figure out what's the, not just what's a really great dress that I want, but what's the right set of accessories to go with it? Well, there's a lot of human curation where people are making those associations on the platform, and where I think we really stand out and are quite unique in our ability to bring those things together. So yes, there's opportunity to take people from the inspiration and the intent to the realization, but I think there's some real superpowers that the Pinterest platform has that are not just AI and ML, but the community of Pinners that are really helping to shape these associations of what's a great room going to look like in this aesthetic? What's a really great outfit, not just a great item, but what's a great outfit? And really helps us think about how do we solve shopping even more than buying? I think the first 20 years of e-commerce were really solving more for buying, not as much shopping. The first 20 years is how do I find a thing the cheapest and the fastest? But if you think about what happened in the physical world, so much more of shopping was about the journey, walking the bazaar, being inspired, finding the thing you didn't know was there. And that hasn't been well solved for in the digital world. And I think Pinterest has claim to that as much or more than anybody else. And we see a lot of that already, and we can take users a lot further down that journey.
Elliott recently took a big stake. What have been your communications with them? What are their expectations?
Well, we shared this on our earnings. Elliott and I both made comments on this at our earnings. We've had a really collaborative dialogue with Elliott. We share a lot of conviction and vision for where the business can go. And so it's been a good, engaging dialogue there. And the investor community, I've spent a lot of time with in past lives, and that community knows that I really care about making sure we have good engagement with our investors and listening and understanding, just as I want to listen and understand to all of our stakeholders. And so we've had a good engaging dialogue with Elliott, just as we'll continue to have good engaging dialogue with all of our investors. And it's great to have a large, sophisticated investor that has conviction about our business and shares our optimism for the future of Pinterest.
Pinterest initially led the way on, creating a better workplace culture. Former engineer Tracy Cho was really active on the representation of women. But since then, the company has been accused of gender discrimination and race discrimination. Employees staged a walkout. In your conversations over the last 30 days, what have you learned about how much has been done and what is still left to do?
Yeah. So I think this is, these events of a few years ago, I think that the company has made tremendous progress on these. These are obviously something Ben and I spent a lot of time talking about, and I spent a lot of time with the board talking about before joining. And one of the things I loved was seeing how much Ben and the team, the board, all had really leaned in on not just wanting to go take action on these things and get to better places on these things, but to really start to lead the way on these. And so as we think about diversity and inclusion, as we think about how we build a really positive community, one of the things that I think is so inspiring to me about Pinterest is that it's a very positive place on the internet where people are going to be inspired and uplifted. It's not a place where people are going to shout at their neighbor about their politics or those kinds of things. It's a place where people are going to be lifted up and inspired, and to say, well, of course, we want to create a community inside the company that matches that, I think is a great combination. And I think there's been tremendous progress on that, but something where I think for any company that work is never done and there's always more to do. So definitely something that is top of mind for me and will continue to be a priority for me and the team.
Pinterest has some prime San Francisco real estate. We were talking about that in the break. We're looking at some videos of inside the office right now. But in San Francisco, there is concern that this, heyday of office culture is over. How are you thinking about that and balancing work from home versus people coming back to the office and reinvigorating an office culture?
So I think it's, well, number one, it's been great to be in the office with Pinterest, with the Pinterest team. Great to see people back in the office again and collaborating. So I think it's really good to see more of that happening. At the same time, we're in a new world that's very different than what it was pre-pandemic, and I think hybrid work, remote work, these are all going to be really important parts of how you think about building a highly talented and engaged employee base. And I think there's real opportunities there that you think about what that means in terms of attracting more diverse talent, for example, as you can reach into new geographies or attract people that may be balancing different things in their work-life balance. I think this notion of there's no one size fits all, I think is really fantastic in terms of how we not only make sure that we're meeting our team where they are, but that we're opening new doors as to how we attract great talent and where that great talent can come from.
Okay. Bill Reddy, CEO of Pinterest, on the first 30 days. Thank you, Bill, for sharing that with us. Appreciate it. Coming up, why Apple is putting a software update on hold. That is next. This is Bloomberg. Few other stories we are watching. The Pentagon has certified SpaceX to use reusable boosters on its Falcon Heavy rocket to launch secret spy satellites. This may give SpaceX a temporary edge in its latest competition with a Boeing-Lockheed joint venture. The company's first spy satellite launch with recyclable boosters will take place sometime from October to December. And the world's largest asset manager is making a significant move into crypto markets. BlackRock offering its first ever investment product directly in Bitcoin. The new private Bitcoin trust will track the price of the biggest currency. The firm says it's responding to demand from large institutional clients. Coming up, Bumble's rocky road ahead with rising competition from Match and Tinder. What's in store for them? We'll discuss. Plus, Meta's brand new COO. Not new to the company, though. In fact, quite the contrary. We'll profile Javier Olivan, Sheryl Sandberg's successor, who may be nothing like her. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's take a look at Bumble now, tumbling after the dating app company topped revenue estimates for the second quarter, but lowered its full-year revenue guidance, taking a hit from the war in Ukraine and stiff competition from the likes of Match and Tinder. I want to bring in Shweta Kajuria for more on this, an analyst with Evercore ISI. So, Shweta, why are we seeing Bumble struggle here?
Hi, Emily. Thanks for having me. I guess one of the biggest reasons why Bumble is trading off today is because expectations were building into the print. If we think about our internet coverage universe, Bumble stock has been one of the best performing names year to date in a market that's tough, in a stock market that's tough, driven by macro. And so as we were heading into the print, expectations were for a strong quarter and a strong guide, and it's just giving back some of that. Fundamentally, however, we don't think much has changed. The guide is a little bit lower, but a lot of it is because of FX, and they should probably get a pass on that. Consumer demand is holding up. It seems like they are largely resilient, and a little bit of a lower guide is because of some product changes that they are pushing off until 2023.
Bumble is unique in that it has this other dating app, Badoo, which is acquired in Europe, which is also under pressure. And then, of course, there's the competition from Match and Tinder. What are the biggest challenges from these competing players?
Well, the best comp for Bumble, I think, is Hinge in terms of the demographics and the overlap across the user base that they have. What came out during the earnings call that Whitney, their CEO, mentioned was that Bumble remains the #1 downloaded app in their major markets, in the US, in Canada, and in the UK, and as of July, also in Germany, where Tinder has a very large presence. So what that tells us is that they're executing pretty well to the degree that now they are the most downloaded app, implying market share gains across their major markets. And so as we look what is ahead, we would compare Hinge and how that is trending in newer markets, which is also what they're trying to do in international non-English speaking markets, versus Bumble. And that's going to be the race. So far, Bumble is doing fairly well. Hinge is expected to be a $300 million business, growing 50%. Bumble is about $1 billion in business, although that does include a little bit of Badoo. So it is a little bit of a bigger scale, growing over 30% in year-over-year growth rate, and they are also executing well.
Couple other companies you cover. I want to talk to you about Etsy first, reporting better than expected results a couple of weeks ago, despite this difficult macro environment. Why does Etsy seem to be bucking the trend?
Etsy is very unique in a lot of ways, not only in the type of items that they sell, less commoditized, the things that you may not necessarily have a direct comparison with. You can go to Amazon and find the same item elsewhere, but that's not so much the case with Etsy. And so what is really helping Etsy is that they have a very sticky seller base, a seller base that doesn't sell necessarily on Amazon or eBay as much as craft fairs. And these are 5 employees or lower sellers who are doing it as a side job, but have very talented skills. On the buy side, they have very sticky buyer base in terms of the retention and the people that come over and over again on Etsy, driving a purchase frequency. And so as that becomes more habitual, that's what's sustaining Etsy. The key question for them going forward is, in a macro environment where consumer spend is shifting away from discretionary physical goods into discretionary, but travel and services, what happens to Etsy's overall growth rate, and why would they have the right to win?
And finally, Peloton earnings coming up in a few days. The rivalry between Peloton and SoulCycle has, some call it desperate. It's certainly entertaining, but they're doing a lot of different things to try to get riders and exercisers back. What's your take on Peloton under its new leadership and its chances for a real turnaround?
Well, I have confidence in Barry, the new CEO. The challenge right now that Peloton is facing is it seems like they have a lot of fires to put out. Competition is one, but internally and operationally, they have the biggest challenge they have is the inventory drawdown, which is they have a lot of inventory that they need to sell. They may have overproduced, and they have cash issues, which means that they have to show positive free cash flow by the end of that next year. And so while there is competition, the biggest thing is going to be execution. I have confidence in Barry. The challenge is I'm not sure how deep their bench is.
All right. Shweta Khajuria, Evercore ISI, will of course be following Peloton earnings out in the next few days. Thank you. Now I want to pivot to Meta and Sheryl Sandberg's successor, Javier Olivan. Though he may be so different than her, you might call him the anti-Sheryl Sandberg. Olivan rarely speaks publicly or even posts to Facebook or Instagram, but he has had a hand in all of Facebook's major competitive battles and acquisitions. While Zuckerberg invented Facebook, it was Olivan who helped expand the service to unprecedented size and power. For more on this, I want to bring in Bloomberg's Kurt Wagner, who just did a deep dive on Meta's new COO. So why would we call him the anti-Sheryl Sandberg? Kurt?
Well, as you pointed out, his personality is just very different, and the role he's going to play, while it's the same title, is going to look a little different too, right? Sheryl, we see her all the time. She's a best-selling author. She's on television. She's out speaking publicly. She's shaking hands with politicians, at least she used to be. Javier is none of those things, right? He operates behind the scenes. He's very quiet. He's low-key. He's incredibly influential, but even inside his own company, there's some people who don't really know who he is, right? It's just a very different personality, and yet here he is stepping into a very similar, the same title, similar job to what Sheryl had leading the business at Meta. And it's obviously a huge job right now, given everything they're going through.
So what does that mean for Meta culturally? If people inside the company don't really know who he is, does that matter?
Well, I think it kind of reestablishes or further establishes Mark Zuckerberg as like the main guy, right? Because before, even though Mark, I think, has been more forward as the face of the company of the last couple of years, it was still a Mark Zuckerberg and Sheryl Sandberg show, right? I mean, now all of a sudden you have Mark and not really anyone else. I guess we hear from Nick Clegg quite a bit on policy stuff, but I just think that this kind of further establishes Zuck as the person who is the face of everything Facebook is doing, not just the product stuff.
Facebook's valuation has been cut in half over the last 6 months. Can Olivan, along with Mark Zuckerberg, turn it around?
I mean, I am not one to bet against Mark Zuckerberg, right? But here is a real crisis of the business for the company for really the first time ever, Emily, right? I mean, this has always been kind of up and to the right, if you will. Never have they had to deal with something like a revenue growth decline, which they had for the first time last quarter. And so they're really pivoting and betting big on this metaverse idea right now. That's kind of what Mark Zuckerberg has said is the future, and the whole company is moving towards that. That's still years away. So, if they are going to turn this thing around, it's going to have to be that Javi can figure out some kind of way to boost that ads business again, which, again, it's not small by any means, but it's certainly not experiencing the kind of growth that we've seen and come to know from them over the last couple of years.
All right, well, it'll be certainly interesting to watch this all play out. Kurt Wagner, thank you, as always.
Thanks.
Meantime, CEOs are increasingly turning to social media to share their feelings about layoffs. In June, the CEO of Klarna took heat after a LinkedIn post included the names and contact details of hundreds of employees that were let go. He says he was trying to get them jobs. Others thought it was a little tone deaf. Now, another social media post by the CEO of Hypersocial, Brendan Wallachy, about layoffs is going viral. He wrote the employees might still have jobs if he had made better choices, ending the post with a selfie of him crying. Some found it a little cringy, but Wallachy embraced the backlash and dubbed himself the crying CEO. Then there was this interview with Redfin CEO Glenn Kelman, who had this to say when I asked about layoffs.
We laid off 6% of our workforce, and I'm the one accountable for that. I feel so ashamed about it. I was so blue. I still am. But it's what we had to do to run a profitable business. And now I think we feel more optimistic about the future, but we're still running on a knife's edge.
Redfin CEO Glenn Kelman there. All right, coming up, we're going to take a deep dive into the world of crypto mixers. What are they? And how could they be the culprit in the newest money laundering schemes? That's next. This is Bloomberg. Time now for our crypto report, and today we're diving into crypto mixers. It's a service that mixes different streams of potentially identifiable cryptocurrencies so that a buyer's account details and history are hidden, therefore making a transaction more anonymous and harder to trace. Here's the catch. While this is great for privacy, it's become a tool for global money laundering and cybercrime. Recently, the virtual currency mixer Tornado Cash was sanctioned by the U.S. Treasury Department after it was used to launder more than $7 billion worth of digital currency since its creation in 2019. Let's break it all down and talk about the debate, which has spurred in the crypto community. Chainalysis CEO Michael Groninger is with us, along with Bloomberg's own Katie Greifeld. Thank you both for joining. So, Michael, do you think the allegation here is fair, that these mixers have become kind of dangerous?
Yeah, I would say to a large extent what we've seen over the many years I've been in the crypto space is that the majority of the funds that goes into mixers do originate for largely criminal activity. So to that extent, it's true. It of course has like a lot of other purposes you can use a mixer for, which is perfectly viable. But as the entire purpose of a mixer is anonymity, it's hard for them to KYC their customers and avoid criminal activity to go through them.
And so, Michael, administration officials have described Tornado Cash as the go-to mixer for criminals. Does the data that you have support that? So
it supports that North Korea have been. North Korea is known to be one of the biggest problems in the crypto space in terms of organized crime and sanction evasion. So they would do different hacks, stolen billions of dollars of crypto over the years, and their go-to mixer was Tornado Cash. If you look at ransomware, that's traditionally not been using Tornado Cash. It's like other mixers will be used for ransomware laundering, but it's typically not Tornado Cash that's been involved with those.
Can you paint the bigger picture for us? How bad has cybercrime actually been this year?
So cybercrime has been in decline. So like last year, for example, crypto in general transaction volume grew 5 times over a year. Cybercrime doubled. It means that you are now moving from percentages to basis points in counting criminal activity in the crypto space. At the same time, the numbers are really big. And like just as an example of it, just this year, we've seen a new kind of hacks, bridges between different blockchains getting hacked, and more than $2 billion have been stolen in those. And that's largely been North Korean hackers that's been behind that. So clearly a lot of bad things are happening, and it's big, but in relatively form compared to the rest of activity in crypto, it's really, really small.
And Michael, this has been such a fascinating story to watch, because just a few months ago, Tornado Cash founders, at least one of them, told Bloomberg News that actually because it's smart contract based, it's decided by pre-written codes, you can't enforce sanctions against it. Obviously, we know that the Treasury Department disagrees, but for developers that are out there now writing and developing code, I mean, how can they make sure that what they're creating complies with sanctions?
We actually have an oracle, an OFAC sanction oracle on the blockchain that you can write into your smart contract. And then you are, well, sanction compliance in the sense that you check for all the addresses that's on OFAC and all the transactions that OFAC would capture. However, that's not the full picture of it. You also need to check for anything else that could be related to that. And yes, then you probably need to put other measures in place.
And to sort of an existential topic about, it feels like a lot of these hacks are happening on cross-blockchain bridges. And I'm wondering what about bridges specifically makes them vulnerable?
So a bridge is basically a place where you buffer or store funds when you move them between different blockchains. So I might want to buy wrapped Bitcoin in the RAND projects. And to do that, I deposit Bitcoin into a wallet. That's basically a hot wallet sitting in a distributed system on the internet. And then I get something else on the other side. But now they can sit like billions of dollars in a wallet. And that, of course, makes it a honeypot. And then I would say, when I've been reading through the different white papers for those wallets, typically it's been a very healthy design and something that would be extremely hard to break into. But last year, we saw also a huge growth in crypto, and everyone wanted to be first to market. So sometimes the implementations and the actual like basic security around servers and other things that was running these hot wallets have been less good. And that's been exploited mainly by North Korea.
Fascinating corner of the crypto universe. Thanks for helping us explore it. Michael Groninger, CEO of Chainalysis and Bloomberg's own Katie Greifeld. Appreciate it. All right, coming up, we're going to have the latest on EV maker Rivian just reporting its earnings results. Is it a miss or ahead? Our Ed Ludlow will tell us. That's next. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14. Those new iPhones, along with new Apple Watch Series 8 models, are coming in September alongside iOS 16 and watchOS 9, which are not delayed. I'm Mark Gurman, this is Power On.
And don't forget, you can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. Now, on to the world of EVs. Electric car maker Rivian cutting its annual earnings forecast, saying it would have a larger than guided loss on inflationary woes, pushing it to tone down its spending plans, even though it posted quarterly sales above expectations and reaffirmed its delivery forecast. Our Ed Ladlow here with more. So mixed, what's going on?
Yeah, it was interesting because you and I have followed this company for a few years, and it was the first quarter of like meaningful sales, 364 million, real company, sells cars. You and I have been talking about how we see them on the road, but you know, it's a reality check. Welcome to how difficult this is. And with inflation in raw materials, particularly lithium and the batteries, they're basically saying, actually, we're not going to lose $4.75 billion this year. We're going to lose $5.5 billion. And we're actually going to pull back our spending because things are tough out there.
And is demand still strong? I mean, as I understand, they've got a super long wait list, right?
Demand is really strong. They are what we call supply constrained. They can't build the vehicles fast enough relative to demand for them. And what was really interesting on the earnings call, RJ Scaringe said that he felt the product still had pricing power, which is really interesting. They raised prices in March anyway, which was a bit of a scandal because they raised it for existing reservation holders. But the idea that they could rise even further does show there's confidence that people want this product. To give you an idea, the R1T on your screen, the quad motor version is already at $79,500. Imagine going up from there. It's a pretty expensive product. So that did show confidence, and the demand is good.
What's your sense? Obviously, it's a newer company, but what's your sense of how Rivian is weathering the supply challenges versus a Tesla? Versus some of the other companies out there.
So Rivian doesn't have the scale that Tesla does, and that's part of the problem. You know, Scaringe was talking about this on the call. They're having to go to their suppliers and say, look, we can do this. Give us the chips in particular that we need. Look at our shiny factory. Because those suppliers of chips are also supplying many others. I think the shares have been bouncing around in after hours. They were down 7%, then up a few percentage points. And there is some element of relief because if you remember when Lucid had earnings, they cut their full year production forecast for the second time this year because they couldn't get enough parts. Rivian reaffirmed its guidance to build 25,000 this year. So even though it's tough out there, they're at least sticking to what they said they could do.
What's your sense of whether this is just growing pains and that will they become a true competitor to a Tesla?
Yeah, they certainly project confidence. You know, they have this very talented CFO, Claire McDonough, former JP Morgan Wall Street banker, and she talks the CFO talk, the numbers, but she does kind of hint that things could improve in the second half of this year. The Inflation Act and the climate bill could help them a lot, you know, as tailwinds for demand, not just in their consumer EVs. Remember, they make the vans for Amazon, and their hope is to sell vans to other fleet operators as well. So growing pains, I guess.
Of all the EV makers that you cover, Tesla, Rivian, Ford, GM, which one seems best poised to weather the second half?
Well,
tough environment.
All of them. I mean, you know, General Motors and Ford are demonstrating, Ford more so, that they have the legacy manufacturing experience to make it work, right? But they're transitioning from gas to EV. Rivian, all I can say is they have $15 billion left on their balance sheet. They are making layoffs, they're cutting costs, penny pinching, and they're acknowledging how hard it is, right? They're doing what many of their industry peers don't do, which is resisting the urge to oversell themselves. So yeah. Let's see how it goes.
All right, Ed Ladlow, thank you. And that does it for this edition of Bloomberg Technology. Coming up Friday, we've got the CEO of Poshmark with us. Actually, I'll be out. Ed will be filling in for me, so you'll see him with Manish Chandra. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.